Here with NVIDIA this morning, the company's value has tripled in about a year. Is this growth sustainable as investors continue to reward the hype around AI? I think it's sustainable. We are in the third or fourth place of the emerging AI market. I think we're still early, although that sounds and may sound uncomfortable. But I think we're going to feel uncomfortable all the way until we get to the real AI bubble. We think this is kind of the icing on the cake for this bull market. Then people will stop talking about evaluation altogether. The strange kind of counterintuitive reality is that if we're worried now that things might be over, they probably aren't over yet. When we stop worrying, then you should start worrying. In today's video, we take a closer look at NVIDIA, a powerhouse in the technology sector that, much like Tesla, has revolutionized its industry by maintaining comprehensive control over its entire tech stack. From GPUs to software updates and cutting-edge firmware, NVIDIA has gained impressive market share and continues to push the boundaries of innovation. We'll compare NVIDIA's strategic approach to Tesla's and explore how similar tactics in controlling technology and ensuring backward compatibility have propelled both companies to leadership positions within their markets. Additionally, we'll analyze NVIDIA's current financial situation, delve into stock valuations, and what these numbers mean for potential investors. Follow us as we unravel these complex topics, providing you with a detailed understanding of where NVIDIA stands today and its path in the high-stakes world of technology investments. Let's dive into the exciting world of Tesla, NVIDIA, and AI technology. But first, be sure to show your support by liking this video and subscribing to Tesla Stock News. Let's get started. Let's turn the spotlight on NVIDIA, a company whose meteoric rise has captured the attention of investors around the world, tripling in value in just 1 year. But the question remains, can NVIDIA maintain its explosive growth? Similar to Tesla's meteoric rise in the automotive sector, NVIDIA's journey has been nothing short of remarkable, reminiscent of Tesla's meteoric rise in its early years. Deepwater Asset Management's Doug Clinton offers a compelling view, suggesting that we are still in the early stages of an AI-driven market expansion similar to the initial Tesla-led electric vehicle boom. It suggests we may be in the third or fourth inning of an AI bull market. Although this stage is promising, it brings with it a level of discomfort that may continue until we reach what can be described as the peak of the AI bubble. The bullish sentiment is not limited to Doug alone. Linnea, investment director at Navin Associates, made a bold prediction for NVIDIA, suggesting it could overtake Microsoft with a potential market value of $5 trillion. Let me ask you one question. If you had to sell everything and keep only one stock, what would that stock be? Well, it would be a monopoly. Probably the best monopoly right now is NVIDIA, NVDA, with its AI graphics chips. There will be a $300 stock in the next 2 years. To put that in perspective, such a valuation would put NVIDIA ahead of tech giants like Apple and Microsoft, drawing parallels to Tesla's disruptive influence in overtaking traditional car companies. For investors, this poses an interesting scenario. NVIDIA's core, its data center business, has seen a massive increase from $15 billion to a projected $100 billion this year alone. This unprecedented growth trajectory reflects Tesla's rapid expansion in its sector, underscoring the shift toward generative AI that is reshaping the computing and software landscape. NVIDIA's overall market strategy, characterized by scalability and advanced software and networking capabilities, positions it as a leader in this technology revolution, just as Tesla led the way in electric vehicles. However, as with any rapid growth, the sustainability of this pace is the subject of intense debate. While the pace may not reflect the past 2 years to infinity, the expansion of data center facilities, now valued at more than $1 trillion, suggests that a vast market still lies ahead. As NVIDIA approaches the possibility of reaching a market capitalization of $5 trillion, it is worth noting how this achievement will not only place its economic influence above most global economies, but also how strategic acquisitions can expand its reach across various industries. Similar to Tesla's expansion beyond just cars into energy solutions, NVIDIA displays the potential for explosive growth, with projections indicating a compound annual growth rate of 37% for the AI market from 2023 to 2030. NVIDIA stands out, like Tesla in its early days, as a beacon for investors looking to capitalize on these expansionary trends. But the burning question remains, is now the time to increase your stake in NVIDIA, just like the early bets on Tesla? Let's unpack this. When comparing NVIDIA to tech giants like Apple, it's important to consider growth trajectories. No need to underestimate Apple, but NVIDIA's massive expansion mirrors Tesla's rise. When comparing its financials last quarter, Apple's revenue fell by 4%, while NVIDIA's revenue rose by a staggering 237%. Over a decade, NVIDIA's revenues rose 991%, significantly outpacing Apple's revenues of 56%. This stark contrast underscores why NVIDIA, not Apple, may be the most exciting growth play right now, much as Tesla once was against traditional automakers. NVIDIA's competitive advantage extends beyond just financial metrics, drawing a compelling parallel with how Tesla has fundamentally transformed the transportation sector through its groundbreaking innovations. Like Tesla, which has consistently led the market with its advances in electric motors and battery technology, NVIDIA is at the forefront of the AI revolution. Under the leadership of CEO Jensen Huang, NVIDIA has been aggressively innovating in AI technology. The recent unveiling of the latest AI chip architectures by Huang, particularly the Ruin and the soon-to-be-released Blackwell model, is a testament to NVIDIA's commitment to staying ahead of the technology curve. These developments are not just incremental improvements. They represent major leaps forward in capabilities, much like Tesla's introduction of advanced, highly efficient batteries that set new standards in the automotive industry. NVIDIA's roadmap is ambitious and clearly defined, and reflects a strategic approach to dominating the AI space. For example, the Ruin architecture is designed to enhance the efficiency and speed of machine learning, promising to accelerate a wide range of AI applications, from self-driving vehicles to complex data analytics. Likewise, Blackwell's model is poised to deliver more advanced features, including enhanced neural network capabilities and increased energy efficiency, which are essential for scaling AI solutions in sustainable ways. This proactive approach to innovation in AI chip technology reflects Tesla's strategy in the electric vehicle market, where continued advances in battery life, vehicle autonomy, and energy efficiency have kept Tesla at the forefront of the industry. Just as Tesla not only participated in the electric vehicle revolution, but led it, NVIDIA is shaping the future of AI, setting new standards for the industry, and providing the foundational technologies that will power the next generation of AI applications. Jensen is leading a major compute transformation using high-bandwidth memory and ultra-fast switches, with the goal of dramatically improving performance and solidifying NVIDIA's leadership in the AI GPU market, just as Tesla did in the automotive sector. What's more, NVIDIA's software prowess is just as impressive as its hardware innovations. The CUDA software platform has set an industry standard, similar to how Tesla's proprietary technology has become a standard in the electric vehicle industry. This ecosystem approach creates significant barriers to competitors and reinforces NVIDIA's position as a leader, much like Tesla's dominance in electric vehicles. Now, delving deeper into NVIDIA's market strategy, it is clear that the company has not only mastered innovation, but also mastered market adaptation. This kind of end-to-end control is reminiscent of how Tesla manages to continue improving its electric cars while ensuring new software updates are compatible with older models. It's a strategy that not only maintains customer loyalty and market dominance, but also enhances it. In a rapidly evolving technology industry, where companies like NVIDIA are constantly setting new standards, one might wonder how important traditional stock valuation metrics like P/E ratios are. However, these metrics remain of fundamental importance. Even amid dynamic shifts in market conditions, traditional valuation metrics provide essential insights into a company's financial health and market position. For example, NVIDIA stock, which was trading at about $150 in July 2022 before rising to more than $900, exemplifies the importance of these metrics. Such a significant rise in stock prices calls for investors to look beyond the superficial numbers. Traditional valuation tools force us to analyze deeper aspects, such as NVIDIA's high dependence on a few key customers, which could pose risks if these relationships are shaken. In addition, the competitive landscape, in which giants such as Intel and AMD operate, presents further pressures that could affect NVIDIA's market share and profitability. Furthermore, the sustainability of profit margins is a crucial factor to take into consideration. In a sector driven by constant innovation and high R&D costs, maintaining profit margins is difficult. Such financial indicators are crucial for investors who need to evaluate whether NVIDIA's current market valuation justifies its future growth prospects and financial stability. Thus, even in a market that thrives on innovation and rapid technological advancement, traditional stock valuation metrics remain invaluable tools for making informed investment decisions. On the defensive investment side, if you're aiming to secure a position in the booming ag market, NVIDIA may still represent the safest bet. It's a scenario not unlike investing in Tesla in the early days of the electric car boom. Although the hype around AI was there, it only became mainstream after the introduction of generative AI technologies like ChatGPT from OpenAI. Since then, the race has been fierce, with NVIDIA at the forefront, helping other companies develop AI technologies. Furthermore, NVIDIA's recent struggles to meet growing demand for its A200 chip and its newly introduced Blackwell architecture underscore a major issue with supply constraints, similar to the early production challenges Tesla faced with its vehicles. These constraints, while highlighting massive demand, also point to growth potential that has yet to be tapped, keeping NVIDIA's future bright. Currently, NVIDIA stock trades at about 45 times forward earnings, which, while higher, is relatively modest compared to its growth.